AT&T reported better than expected earnings and reached a truce with an activist investor. The company agreed to focus on its bottom line and not enter into any big takeovers in the coming years. Activist investor Elliott Management called into question AT&T's strategy of making big acquisitions. As part of the truce, AT&T also committed to stock buybacks. It will appoint 2 new directors to its board and will conduct a review of its portfolio, and it will pay down debt. When you think of activists, you may think of investors who pressure a company to aggressively cut costs, but that's not always the case. Leslie Picker did some digging.
When defending against activist investors, companies like AT&T often argue that the outside input may not be best for the long run. Elliott had been pushing AT&T to focus more on the bottom line and cut out unnecessary acquisitions. But what if so-called corporate raiders were actually corporate innovators? That's the case that researchers from Duke, Columbia, Yale, and a host of other schools are seeking to make in the Journal of Financial Economics. Their findings contradict conventional wisdom that activist investors slash and burn companies in favor of short-term profits. The academics found instead that activists actually make companies more innovative. They analyzed publicly traded companies that were targeted by hedge funds between 1994 and 2007. The academics found that while research and development spending dropped significantly in the 5 years after a hedge fund gets involved with the company, the number of patents and citations per patent actually increased. The study argues that outside intruders actually make companies more efficient when it comes to innovation. Elliott hopes that its involvement in AT&T can help move the company forward during this pivotal time in the telecommunications industry. For Nightly Business Report, I'm Leslie Picker.